Hello and welcome to Between the Lines, the podcast that dives deep into the stories redefining APAC's reinsurance landscape. Recorded here in the newsroom of InsuranceAsia News in Hong Kong. I'm Mithun Varkey, Editor-in-Chief for InsuranceAsia News. In this episode, we'll discuss NatCats in Asia, Australia's reinsurance reforms, the rise of asset-intensive reinsurance in Asian life markets, Marsh's acquisition in Japan, as well as offer you a sneak peek of the stories that the team is working on. And our special guest for this episode is Martin Au-Yeung, Client Service Manager for North Asia at FM. And Martin will discuss FM's underwriting and business development strategies for the region, dealing with emerging risks and solutions for supply chain disruptions.
Traditionally, in certain markets around the world, insurance buyer had a tendency to focus on the insurance package premium terms. So the awareness of total cost of risk is something that we really want to hit hard in our market region, right? So total cost of risk could well be a combination of the cost to deal with a loss afterwards, and on top of the cost of managing or risk transfer needs. So it's a balancing act, right? Do we want the client to spend the resources of managing the loss or managing the risk transfer needs before a loss happens? So it's really about articulating that balancing act to our buyers in our region.
I'm joined by the InsuranceAsia News editorial team. I have with me Deputy Editor Andrew Mullen.
Good to be back as always.
Reporter Joana Nguyen.
Hello.
And I'm delighted to introduce a new member to our team, Aidan Gregory, who joins us at InsuranceAsia News. Aidan's relocated to Hong Kong from London last week. Aidan, welcome to the team and to Hong Kong, and welcome to Between the Lines.
Thanks, Mithun. It's great to be here.
Aidan, you've been here for about 10 days now. How's Hong Kong treating you?
It's very hot and humid.
It's been quite a stormy welcome for you, Aidan. Let's start with a roundup of the big NatCat events the past week. We woke up to a tsunami warning in Japan after an 8.7 Richter earthquake in the remote east coast of Russia. Andrew, what can you tell us?
Well, on the tsunami warnings across the Pacific, we're still waiting to see how those roll out after the earthquake in Russia today. But what we have seen some quite devastating losses in China already, and this is mainly in Beijing. There's been continuous heavy rainfall in the eastern, northern, and northeastern regions of China. This has triggered floods and warnings, as I said, in Beijing, Hebei, Jilin, and Shandong. There's been 30 deaths in Beijing's mountainous northern districts, and there's 8 further deaths due to a landslide in Hebei province, which borders Beijing. And interestingly, from an insurance perspective, some claims have actually already been paid. I read one report this morning that one auto claim had been paid within 40 minutes. And looking at the reports, there's obviously auto claims, property claims, agriculture and health claims already being filed, and quite a few of those have already been paid. Closer to home in Hong Kong, you've already mentioned the black rainstorm warning we had, and also the T10 typhoon about 2 weeks ago. Financial losses for that on that Sunday have already been estimated at $255 million US. That's mainly business interruption losses given the weekend in Hong Kong.
Yeah, it all reminds me of 2023 when we had a T10 typhoon in Hong Kong, a black rainstorm, and a flooding in Beijing following Typhoon Doksuri there. It was a big loss year for insurers across Greater China. Talking about losses, I think we've had a few reports on the first half cat losses. Aidan, you've been looking into that, the Willis report recently and the Munich Re report. Can you give us the numbers?
Sure. So it looks like the industry's not going to get much respite after multiple years in a row of $100 billion plus natural catastrophe losses for the global reinsurance industry. And it's now fairly clear, at least to Munich Re and Willis, this year is going to be no different. And, the first half of 2025 has seen, numerous large natural catastrophe loss events led principally by the LA wildfires, which is sort of the worst in California's history, and has spiraled now into an insured loss of at least $40 billion. But close to home here in Asia Pacific, it's been no different. It's been a very busy calendar of natural catastrophes, including the wildfires that we saw in Japan and South Korea. There was also Tropical Cyclone Alfred in Australia, which was the first landfalling cyclone near Brisbane in over 50 years. And the earthquake that struck Myanmar and also heavily impacted Bangkok earlier in 2025. So all these events have combined to leads essentially, a forecast of this year's easily going to clear $100 billion, particularly if there's a busy Atlantic hurricane season later on this summer and autumn, then we're easily looking at another $100 billion catastrophe year, which certainly makes life very difficult for the reinsurance industry.
Yeah, absolutely. I think $100 billion losses is now certainly the new normal. I don't think any insurer is expecting a year that falls below that threshold. Moving on from NatCats, the Indian regulator IRDAI has a new chairman. Andrew, you've been tracking that developments around the appointment.
Yeah, this is they've finally made a move on this. The Indian government, former Economic Affairs Secretary Ajay Seth has been appointed for a 3-year term. This is an important regulatory post, but it's been left vacant for 3 months after the tenure of the previous chairman, Debashish Panda, ended in March. There's a lot of people being put forward for this role, but looks like the Indian government has finally got their man. And it's a pivotal time for India, so it's an interesting time of what this former Economic Affairs Secretary is going to bring to the role. His predecessor was looking to make a lot of changes, so it's a kind of wait and see, and we're going to keep monitoring this to see what comes out of this appointment.
Yeah, it'll be interesting to see what the new chairman does, considering India is one of the fastest growing insurance markets in the region. I wanted to talk about the Marsh half-yearly insurance rate report. It's clear that we are in a softening market, and what's really notable is that it's not just softening, the softening is gaining momentum. According to the report, both the Asia market saw a 5% reduction in rates in the last quarter, and the Pacific market had 11% reduction, a double-digit reduction, and this is a 6th straight quarter of reduction in both these markets. It's more than most other markets. In fact, what's really interesting is that Asian rates reduced by 3% in the first quarter of this year, and now it's become 5%. And in Australia, it was 8% reduction, which is now quickened to 11% this year. So, and it is across the board. Property rates are down, casualty rates hasn't fallen as much as some of the other lines, but they're down as well. And FinPro lines and cyber, which have been softening for a couple of years now, continues to soften. So it's a cause of concern for insurers, while, rate adequacy is still there, is what underwriters tell us. But I think at some point, certainly for financial and professional lines and cyber, the softening has to sort of bottom out. I had a conversation with the regional CEO recently who mentioned that they have had a couple of years of really fast growth, but I think it's time for them, he was saying, for insurers to sort of stop and take stock and see how the market conditions play out for the rest of 2025. Yeah, it'll be an interesting time for insurers in the coming quarters, but none of that has stopped broker activity in the region. Just yesterday, we saw that Marsh has acquired a company in Japan. Joana, can you tell us a little bit more about the deal?
So Marsh Japan will acquire the Tokyo-based in-house insurance agency business of Mitsubishi Electric Corporation. So on November 4th, Mitsubishi Electric will transfer shares of its subsidiary Mitsubishi Electric Insurance Service to Marsh. So this insurance service company is the in-house insurance agency of Mitsubishi Electric, and it provides commercialized broking to group companies and business partners, as well as personalized products to the group's employees and their families. So this acquisition expanded Marsh's presence in the Japanese market, but this also indicates a broader trend in Japan's broking landscape as well.
Yeah, that's right. I mean, we saw Aon acquire Mitsubishi Chemicals in-house agency business. Last year the deal was concluded in March. So I think this sort of chimes with what's going on in the Japanese market, the broader transformation happening both with the insurers and the broker market. So this is something that we should be tracking in the coming days.
Exactly.
Great. I mean, speaking about brokers, this week we also saw a new broker enter the APAC market. Specialty reinsurance broker Consilium is expanding into Asia. They've set up an office in Singapore, and they've hired Rob Drysdale as a CEO. Rob used to be head of Southeast Asia for Descartes. So I had a brief chat with Rob after the news was announced. Rob will continue to be at Descartes because he's serving his notice period. So it'll be a few months before the broker actually kicks off in the region. We've seen a few new specialty brokers come into the market. So it's kind of getting crowded in Singapore. It'll be interesting to see what Consilium has in store for the region. Aidan, you've been looking at the asset-intensive reinsurance market in the region. We've seen quite a few deals with life insurers, especially in Japan, as well as in some of the other markets. What are your sources telling you?
So I've been speaking to brokers in recent weeks about this topic, and asset-intensive reinsurance has been identified as quite an exciting space. And we've seen a string of these big jumbo deals where local life insurers in the region can do these deals with offshore reinsurers that are backed by large global investment firms. Many of these reinsurers are located in places like Bermuda. But these deals are an important tool that the life insurers can use in terms of capital management. And and they obviously they've been happening during a period this year where we've seen quite intense capital markets volatility, particularly following April in the wake of the US administration's decisions to impose tariffs on pretty much every single country in the world. Markets are kind of on the up again now, particularly as the US continues to agree various bilateral deals with its key trading partners such as Japan and the EU this week. But these block life deals, they're expected to continue, despite the fact that they have the sheer size and scale of some of them, particularly in Japan, has begun to attract regulatory scrutiny. Regulators concerned about how much exposure these life insurers have to offshore reinsurers.
Can you tell us the sort of investors and companies that are doing these deals?
So we saw earlier in the year we saw Taiyo Life do a $4 billion reinsurance deal with Fortitude International, and it was swiftly followed by Japan Post Insurance, which did a 3.6 billion block with Talcott Life Re earlier the same month. And there's growing sign the trend is beginning to proliferate around outside of Japan. So the brokers all expect the deal flow to continue to proliferate despite the regulatory scrutiny in Japan. And there's even signs that this proliferation of the market is already underway. And we recently saw an undisclosed Hong Kong life insurer do a $1 billion block with Resolution Life. It's quite a landmark deal for Hong Kong and the market in general.
Interesting, yeah. I mean, and these are all private equity-backed Bermudian reinsurers that are mostly doing these deals.
Yes, so the reinsurers are backed by large global investment firms who are generally in a much better position to manage these kind of assets, and they're often legacy assets. That date back to a time when the interest rate environment was very different to the one that life insurers currently face.
We recently had a story on wide-ranging changes proposed by the Australian regulator for reinsurance-related capital requirements. Andrew, can you tell us what's happening in Australia?
Well, what's happening is nothing right now. We're still some months away from any recommendations being given, and these are from the Australian Prudential Regulatory Authority. They launched their first major consultation on reforms to the nation's reinsurance sector. The official period ended in February, and the initial expectations were that they would provide a report back to the market in June. However, our reporter, sources told him that the body won't have any suggestions maybe for the next few months. The APR is asking insurers how it could adjust its reinsurance settings or its process for approving the capital benefit of reinsurance arrangements, and this is hoped will improve access to the full range of reinsurance solutions. The regulator has proposed wide-ranging changes to reinsurance-related capital requirements, which it claims will improve access to reinsurance protection. The suggested reforms also include mandating all perils reinsurance coverage, reducing reinstatement requirements, and removing the need to hold reinstatement premiums as part of the insurance concentration risk charge. Now, insiders have told us that these reforms are going to be suggestions to merely start a dialogue and won't be actual proposals, I guess, at this stage. And another insider told us that investors would certainly welcome greater access to Australian insurers. So it's a bit of a wait and see right now, but the wheels are turning slowly, it seems.
Sounds like a very interesting story, Andrew. Talking about regulatory changes, it seems like quite a lot going on in Australia at the moment. Aidan, you're working on a related story. What have you got?
Yes, so on the subject of Australian rules, Australia is moving to a new mandatory reporting regime for mergers, whereby the Australian Competition Commission from January is going to have much greater powers to block mergers. much earlier on in the process. So for the big Australian insurers and banks, whenever they do M&A, it's likely not going to be too much of a change for them, because they will have already been talking to the competition regulator for some time during these processes. But under the new regulations, all companies in Australia, all Australian corporates will have to mandatorily report whenever they embark on an M&A process. And I've been speaking to Australian lawyers who they see that these new regulations, first of all, it's a big power grab by the ACCC. They're going to have much more beefed up powers to block mergers earlier on in the processes without having to go and get a court order. And it's going to saddle businesses with much higher costs and complexities. Even if your merger likely doesn't have big competition concerns, there's still going to be a legal obligation to report it to the ACCC. It's interesting for Australian insurers and brokers. The industry has obviously been through a pretty dizzying period of consolidation in recent years, and the Australian carriers are already quite concentrated at the top of the market, and they're going to face a lot more kind of regulatory scrutiny around competition under the new regime.
Sounds like the Australian brokers will have more compliance burden on them with these new regulatory changes.
Yeah, definitely. I mean, even the smaller brokers who, under the old regime, were likely too small to attract much in the way of regulatory heat, they're now going to find themselves having to mandatorily report any deals that they do to the ACCC, and face months of scrutiny. And even if it progresses to even deeper investigations, then there's a lot of legal costs involved, and there's likely to be court cases on the technicalities of who this new regulation applies to, and certain exemptions that are also part of it.
Sure, great. We'll be looking forward to that story, Aidan. Joanna, what have you got planned for this week?
So I'll be having an interview with Scott Reichelt, who is president and CEO of CrawfordAsia, on the loss adjusters' plans and strategies across the Asia Pacific. He probably will have a lot of insights on the claims environment in the region as well, so I'll be following up on this.
Andrew, what are you working on?
Yeah, I'm looking to follow up on my Australian cycle season review. I'm looking to speak to underwriter Will Hiller. He works for G-Cube. Will is a renewables insurance expert, and he's reached out to us, and we're looking to speak to him about how Nat Cats are increasingly impacting renewable energy projects around the world. So it'd be good to speak to Will soon and hear what he has to say.
Great. On my end, I'm going to follow up on the new chairman of IADAI. I'm trying to reach out to the insurers and brokers in India and trying to understand what is it that they would expect of the new chairman. We also have a story coming from one of our interns, Roshan Nambiar. Welcome to the podcast. And can you tell us what is the story that you're working on today?
So yes, I've recently got in touch with Colin Fagan, MD and co-founder of Blue Zebra Insurance in Australia. They recently changed their underwriter to QBE and changed capacity providers to Chubb, AIG, and HDI Global Specialty. In the interview, he discussed Blue Zebra's expansion plans and gave insight into the current market trends in Australia, especially since APRA has increased its scrutiny over MGAs.
Thanks, Roshan. That sounds like an interesting story. It's been a fantastic meeting, everybody. Thank you very much. Let's get back to work. Our guest today is from FM. While FM is a very well-known name in the industry, people outside of the industry probably do not know them as much. They're a very specialist property insurer. I've had the opportunity to visit their experiential risk management facility in Singapore. It was quite an experience for me. Seeing this massive facility in Singapore with these rooms explaining how some of these fire hazards and flooding and tsunamis affect property, it was quite a learning experience for me. Today's guest is from FM, Martin Au-Yeung, who is the client service manager for North America. I talked to Martin about FM's underwriting and business strategy in the region, as well as about emerging risks and business consulting and risk engineering services that FM provides to the clients in the region. Listen in, it's quite an interesting conversation. Hello, Martin. Thank you very much for joining us and welcome to the podcast. I understand you've recently relocated to Hong Kong, returned to Hong Kong rather, after many years in Canada. So how are you settling in?
Yeah, it's been a very interesting journey, and I was born and raised in Hong Kong until the end of my high school times, and then I moved to Canada, received my training in Canada, and then shortly after leaving university, then I joined FM, and since then it's been a 25 years of great journey with the company. And my specialty is in a specialty industry underwriting, including pulp and paper, chemical, and mining business. Then on top of that, I also had oversight over our Canadian business as well. So I look forward to bringing my expertise to Asia Pac and while improving our market presence in Hong Kong and North Asian market.
Good to have you in Hong Kong. To start off, I mean, FM is very much the sort of commercial industry, industrial property specialist. You said you've been in risk engineering and assessment, and I spent some time as underwriting. What we're really interested in understanding is the specific engineering and data-centric strategies that FM is using sort of enhance its underwriting and building resilience with its clients in the region. Could you tell us about your strategy in the region?
Oh, absolutely. So at FM, we are very unique when it comes to providing risk management services. Not only we provide risk transfer solutions, but we also offer a risk assessment, a risk management solution. So we use our engineering team to identify, assess, and quantify risk. And we basically collect this information to turn it into our risk improvement or risk recommendations to support our client needs of managing the risk. So we have more than 100 engineers in our territory. And the reason for that is that if you think about Asia, right, Asia is a very broad territory, it's a very wide region. We have a very diverse culture. We have differences in terms of culture, rules, regulations, and the way of doing business. And there isn't a one-size-fits-all approach when it comes to supporting our clients in their own specific geographical region. So at FM, right, I mean, well, what we are trying to do is to use our engineering knowledge and expertise, but we customize our solutions to ensure that our product and services are going to be able to meet the local needs. Because, like, I mean, depending on the country, right, I mean, the tactics, the strategy will be very different. And even when we are communicating our value, right, I mean, well, depending on the buyer in the region, so we will need a very customized approach, which is something that we try really hard in our region, right? So yes, we are a global company. So we believe that we are able to deliver a global service to the local market through our local knowledge and expertise with our own staff member in Asia region.
Interesting. So, I mean, Asia is obviously a very cat-prone market. We have climate change, of course, and we've just recently, in the past week, seen a few big events in Hong Kong, in China, and around the region. How does sort of FM differ from some of the other underwriters out there in trying to sort of quantify the business risk for clients? How do you sort of tailor solutions for your clients in the region?
We focus on helping our client understanding their risks and exposures, in addition to our risk engineering tools by having boots on the ground services to support our clients locally. We also have done a lot of research on climate exposures. We also have done a lot of research to support building materials approval, for instance. When it comes to helping our client managing the risk, in addition to our local boots on the ground services, we also focus on a lot of research effort. So one of the challenges in Asia is that good quality data is somewhat lacking depending on the countries, right? So in order to make up that shortfall, FM has been in the research arena for years to try to develop our own climate maps to help our client understand the exposure in their specific geographical area, flood maps, hail maps, wildfire maps. Depending on where you are, we have the tools to support our clients to understand their exposures at the local level using our research and data analytics effort.
Interesting. I mean, I've had once, I was in Singapore, the FM's lab in Singapore. It was quite an experience. Seeing all the technology and all the modeling that happens there. How do you sort of blend that risk engineering skills and risk transfer and underwriting in the region?
I think a lot of that is awareness, right? I mean, well, traditionally, like in certain markets around the world, like insurance buyer had a tendency to focus on the insurance package premium terms. So the awareness of total cost of risk is something that we really want to hit hard in our market region, right? So total costs of risk could well be a combination of the cost to deal with a loss afterwards, and on top of the cost of managing or risk transfer needs. So it's a balancing act, right? I mean, well, do we want the client to spend the resources of managing the loss or managing the risk transfer needs before a loss happen? So it's really about articulating that balancing act to our buyers in our region. And so at FM, right, I mean, well, we are trying to focus on mitigating losses so that, our client is going to spend their resources and effort on something that is going to give them a higher return than trying to deal with an aftermath as a result of a loss.
Interesting. You also mentioned some sort of risk engineering and consulting services. How does that fit into the model?
So by helping our client to manage risk, like we believe that we will see fewer losses as a portfolio, right? So that gets to the benefit of being a mutual company, because we are not trying to make a profit for the benefit of shareholders. We are trying to make a profit for the benefit of mutual owners. And when we make a profit, we will return the profit. We will share the profit with our owners through the mutual owners credits. So there is a risk engineering component. There is a financial component. What we are trying to do is to marry these elements when we are as part of our risk transfer, risk management package. And I think there is a great opportunity for our buyers to acknowledge the power of this model. And we look forward to engaging our client in our region to enjoy the benefit of being neutral of the company, being neutral as part of our business model.
I know you're fairly new in the region in this sort of role, but how do you see the challenges in the market? Like, climate change, we mentioned that, and you said the lack of data is another problem around the region, and there's a massive protection gap as well, even on the commercial and industrial end of the market. What are the major challenges you see that needs to be addressed in the region from your perspective?
I think it's really about managing emerging risk. And what I mean is that Asia is at the forefront of the global trend when it comes to handling supply chain challenges, given the fact that a lot of manufacturing operations are being moved to Asia, for instance. So the awareness of handling supply chain challenges is going to be something that for all the buyers that they need to think about, right? So that's challenge number one. Water emerging risk that I can think of is it's really about managing technologies such as like lithium battery, for instance. Whether it's lithium battery being used on the personal device or even battery being used to support power generation industry, right? So the fire hazard for battery is well known. But when it comes to mitigation strategy, right, this is something that is really a new arena for not only for the operators, but also for the insurance industry as well. So at FM, right, we have done a lot of research. We have done a lot of study in terms of how to mitigate that exposure. And that will be a very powerful tool for our buyer in Asia to get to know, where the trend is headed, right? The last but not least, data center is one of the areas that a lot of Asian buyers will have to think about, especially because of AI, right? Artificial intelligence, because of the use of data, right? There will be more data center to be built in the region. So the data center that we can think of is very different than the data center that we traditionally think of, because there is a lot more power consumption associated with these data centers, right? Some of these like big data center campus, there will be like on-site power generation, which is going to introduce a very different level of exposures that the general buyer might not necessarily have visibility into. So we at FM, we have been doing data center for years. We've been doing power gen for years. The beauty of that is we are now able to leverage the expertise from both fronts and marry them together and utilize our knowledge, share our knowledge to make an impact in our Asian marketplace.
That's quite interesting. I mean, there's quite a lot of conversations around data center of late in the region because, I mean, we've seen certainly markets in APAC becoming hotspots for new data centers, and lithium-ion batteries, you mentioned, that's always a big risk both at the consumer end as well as on the supply chain. And we've seen some fires aboard ships, etc. Are there specific technologies or mitigation strategies available for some of these new emerging technologies on your end, or is that something that's still evolving? How do you model these sort of emerging risks on your end?
Yeah, so it's really about helping our client to assess the risk, right? I mean, well, like in today's environment, we see more and more lithium battery being stored in a warehouse environment, for instance. We also see there are more and more clients using battery to store the energy that they produce at a power generation location. So we are able to bring in our engineering expertise to help our client in terms of maybe like reinforcing the sprinklers to help mitigate fire exposures in a warehouse environment. We also have the ability to guide our client when they build a battery energy system storage unit at their power gen location. So how do we help them to design the layout so that a fire involving one container will not jump to another one and just put the entire facility in jeopardy, right? So there is a lot of that effort going on to support our client globally within our organization. And I really want to touch on the supply chain challenges in today's environment too, right? With all the changes and uncertainty around the world, how we help our mutual owners, how do we help our customer to understand production bottleneck, supply chain challenges, whether it's internal or external, right? It can be a challenging form statement. And we at FM, right, we have our business consulting unit to support the effort of understanding how money flows within the organization. By having that good understanding, we are going to be able to help our client to understand what will be the key revenue bottleneck, for instance. And once we identify those bottlenecks, how we are going to establish mitigation strategy to alleviate challenges in the event of an outage along the way, the supply chain within the company, right? So that's one of the tools available at our client disposal. And then as a last resort, right, insurance coverage could well be the last line of defense when it comes to managing supply chain. And so at FM, our policy coverage is broader than most of our competitors in terms of how many tiers of suppliers that we will pick up when it comes to providing the supply chain coverage. So unlike any other carriers, right, they only provide protection for tier one supplier. But at FM, we provide multiple tier protection for all the suppliers for the entire supply chain, which is a really powerful key differentiator when it comes to protecting the supply chain exposure.
That's quite interesting. That's going beyond the typical understanding of a property insurer in this case. My last question probably would be around how is FM adapting to the sort of dynamic nature of risks such as climate change, and how do you assist clients in with future exposures?
There are a lot of research effort going on in the company. Let's use renewable energy, for example, right? Renewable energy segment has been growing very dramatically in certain parts of the world, whether it's in the United States or in Europe. So one of the key challenges we run into is how to help our client choose their solar panel, for instance, in a convective storm exposed area. This is a really challenging topic in North America. So the default solution, for the industry is to pick a risk transfer solution. But at FM, we spend a lot of effort and energy to help our client to test the panel to approved products so that we are in a much better position to guide our client when it comes to, hey, we'll select the panel for a given geographical area. How do we help our client to be more resilient, right? We play a key role in that regard, which is a very powerful way to manage some of these what we call climate risk as our client continue to expand their global footprints. So the other key topic is what we call secondary peril, right? These are the perils that are not necessarily well understood by our clients and industry. At FM, right? We are really at the forefront of developing natural hazard maps to capture secondary perils such as convective storms, wildfire. Like these are the unique products that are not available in the marketplace, but FM.
Great. Thank you, Martin. That's been quite insightful and, interesting. I mean, secondary perils, the industry cannot stop talking about secondary perils. Yeah. There's nothing secondary about it as things stand. Martin, really, thank you very much. Really enjoyed having this conversation with you. Thanks for your time.
Thank you for having me.
That's all from us in this episode of Between the Lines. We'll be back again in 2 weeks. In the meantime, come and follow us on LinkedIn. Connect with us. Make sure you're subscribed to our daily and weekly newsletters delivered straight to your inbox. And of course, we'd love to hear your feedback on the podcast. Email us at editorial@insuranceasianews.com. I'm Mithun Varkey. Thanks for listening.